What is going on, guys? TVC here. Today I'm going to be showing you how I made $580 overnight while I slept. I'll be showing you my thought process, my entry model, and how you can replicate this for the future. So make sure to stay tuned. If you do want to have profitability in your funded accounts and have a good edge, make sure to subscribe, like, and comment down below. As you can see, this is my profitability per trade, all my stats here: winning trade, trade percentage, average losing trade. See, my risk to reward is massive. Let's get into it. So if we go to the charts here, right, I trade the S&P, or the ticker is ES. I'm doing micro contracts because of my account size, right? I'm implementing risk management. I will be making a video on how I actually manage my risk. If you guys are struggling with blown accounts, I manage my accounts very tightly, right? That's all it takes to become funded. You just need to have some risk management and some self-control, and you'll be able to get funded. It's as simple as that. But looking at this MES chart here today, what I noticed was, overall, right, we're completely bullish. The draw on liquidity for the high time frame is these relative equal highs here. We're currently about 100 points away from reaching these relative equal highs, so there's no chance I would be seeing a reversal and continuation down before we sweep these highs. So overall, this whole week I've been bullish. We saw price yesterday actually close above these highs, so he pushed through this level here, which made me even more bullish. Yesterday these candles weren't formed, so when I was looking at taking a trade yesterday, my drawn liquidity for the smaller time frame wasn't actually these highs, because that is you got to think that's a 100-point move. You're not going to get a 100-point move overnight unless you have some crazy news. So the next point of interest for my drawn liquidity was actually this fair value gap here. You can see we're actually in line with it currently, and I wanted to target this area because two things could happen here, right? We could come up into it like where we are now, and then see a retracement back down to maybe get some more liquidity to then push higher, or we could just see a complete blow through that and then target these highs here. So I didn't want to risk that reversal there. I had my take profit at this fair value gap, and you'll see why I actually did that, because it correlates to my entry model. So I actually get my take profit levels off my manipulation leg, and I do standard deviation, but I'll go more into that when I'm actually showing you the entry. But this perfectly correlates to that, and you'll see why in a second. So that's why I targeted this level first, and then I'm looking at targeting this relative equal highs up here for today or potentially next week. So if we drop back down to a 5-minute time frame, I love the 5-minute time frame, guys. If you're looking for entries on 1 minute or lower, right, it's just too fractal. It's too zoomed in. You're gonna get things that look like entries where it's actually not, right? It's just price moving, and you're gonna think, oh my god, it manipulated that. It's changing the state of delivery, and then yeah, you're gonna get stopped out. So 5 minutes is a good indication of what price is doing, and then you want to corroborate that with a higher time frame to align those two things together, right? 1 minute is a bit too zoomed in. If you want to use it to look for entries, right, after you have confirmation from a 5 minute, then yep, that's good, but don't be looking for your whole model in a 1 minute. All right, just look for entries, look for pullbacks, retracements, anything in a 1 minute, but stick to a 5 minute. So as you can see here, this is my entry. I've got 5 contracts on the micro MES. If we actually just scroll back a bit here, I'll show you where I was on the day yesterday. So that's where price was about yesterday when I got into the charts. Now if you look to the previous day on the 25th, we have this sort of consolidation here of price, right? So we got this range here, we got these are the lows, these are the highs. Price hasn't left that range yet, and then I noticed here we had this manipulation move down, swept all this liquidity. So at this point I'm very bullish. So when I'm trading this ICT model, what do I need to see? I need to see a manipulation move down, sweeping the sell side liquidity. Then I need to see a inverse fair value gap, right? I want to see a bullish SMT get put in, and I want to see a change in the state of delivery. So right there, we swept the previous internal high, and we've changed the state of delivery. So we pushed past that. So yeah, we had all these confluences, right? All our checklists. So I'll put my checklist on the screen right now. That is my checklist. I follow that every day. I make sure all these are ticked, right? I'm only taking A++ setups. I'm not taking half-assed 50%. I'm unsure of what could happen in trades. This is guaranteed confirmation of what price is doing and wants to do, right? When you see you have a sweep of all this liquidity, then you're inversing fair value gap. As soon as you inverse fair value gap, what is that telling you? Price is reversing in direction, because it's disrespecting this level. It's disrespecting this high, right? If we wanted to go lower, we wouldn't be making new highs here. As soon as price disrespects that, disrespects the fair value gap here, that should be a clear indication to you that price is reversing. Price is doing something different now, and would be targeting a new level of liquidity. So yeah, to find my take profit level, right? So this is where price was. We're still at a pretty high range after this move here, after this change in state of delivery. Some people may think, oh, this level here is the draw on liquidity. But you got to think, this is still our range that we had. This is a consolidation range. I wouldn't say this is a massive draw on liquidity, especially looking at the high time frame with that external draw, right? Whenever you're looking at draw on liquidities, it's always the external draw. Don't look at internal draws, because yes, this has liquidity at it, but the external draws are the bigger pools of liquidity that the market is going to target. So this level here, yes, we are definitely going to take it out, but it's not the main draw on liquidity that I'm chasing. So to find where I'm taking my profit, I want to get standard deviation tool, and you want to do the standard deviation of the manipulation leg. So what does that mean? It's all the candles that are in the same either down close or up close trend to sweep that liquidity. So if we look here, we have 1, 2, 3, 4 candles here that were in the move of sweeping or manipulated down to get that sell side. So if there was a bullish candle here, it would just be this candle here, and you include the wick as well. So keep that in mind when you're doing your standard deviation. So if I do the standard deviation here, we got this 200 to 250% range here. Now if I just clear, let me redo this, right? Let me clear all the drawings so it's a bit clearer. Right, so if we do standard deviation, and then I put a mark down, I put a line that goes horizontally across, so we can see what is actually to the left of us, right? So if I go to a higher time frame here now, what I was talking about earlier was this level that I've retraced is perfectly in line with the equilibrium of this fair value gap. Now, that is a key level, that is a higher time frame draw on liquidity, because it's an inefficiency, and price likes to do 4 things. It likes to hunt liquidity, it likes to fill inefficiencies, it likes to generate liquidity, and it likes to return to equilibrium. So if you look at this range right now, right, we're already well past equilibrium. Equilibrium's like down here. Alright, if we retrace this whole level here, 50% is about there. We're already past the equilibrium, so we're in the premium right now. So we're going to be targeting this high level draw on liquidity. What's next? Well, this is the key thing here, is this inefficiency, because price likes to fill these inefficiencies. And I'm predicting these highs are going to get taken out here. But it's going to do one thing at a time, and it's going to fill this inefficiency first. Right, it's a big level. Big draw on liquidity, that's why I targeted that. It aligns with the standard deviation perfectly. So you may be asking, where do I put my stop loss? If you're having very small trades that aren't affecting your account, right, I'd be putting them at the swing low here, because price could come down, sweep this liquidity, and then push higher. But if you are leveraging a bit more, you can't risk that much of price movement, right? Because you'll be over leveraging at that point, right? You'll be getting stopped out, and then you'll be blowing your account. So these levels that got disrespected would be the same levels that, if we saw price come below that again, would be in a bearish trend. Therefore, I want to have my stop loss around these levels here, because if price is coming down this far, then it's most likely going to continue lower, and there's no point of moving your stop loss further and further down, because it's going to be hunting the high time frame draws on liquidity. So I like to have mine somewhat tight. So I had mine just below this fair value gap, right? It could still tap into it, wick below, as you can see at these levels, but it can still respect it overall. So if you have it at this, I usually have it like at the bottom of the candle that made that fair value gap, and that's a pretty safe stop loss, I would say. Some people could have it tighter, right? Some people will put it in the fair value gap candle, but I like to have mine a little bit of room. I'm not over leveraging too much, so I have very good risk management. Risk about 1% of the account every trade, so I'm not really too worried about price moving. But yeah, that was essentially the trade. I did try to record it, but my video corrupted. Entity profit up there, perfectly in line with that 200%. That's pretty all it. So if you guys did enjoy this, make sure to like, comment, and subscribe, and make sure to join the Discord, guys. This is my community here, TBC. Currently have no members. I've literally just made this, but it's gonna have all this free content available for you guys. You're gonna be able to ask questions. I want to be doing live trading eventually once we get a certain amount of members in the group. I want to have a premium content channel eventually, right? It's all going to be free the first couple months till we start building a community up. But once we do that, there's going to be premium content, there's going to be mentorships, there's going to be one-on-one. But for now, it's all going to be free. And you can ask me any questions you want. I'm happy to help. If you need help trading, whatever, join the community, guys. Share your wins, share everything, and then yeah, we can build it together. But yeah, thank you so much for watching. If you did find any value in this, make sure to like and let me know down below. Or if you want to see any tutorials on how to do something or how to understand something, let me know down below. I'll make that video for you guys.